All right, let's talk about the term fannied and freddied out. What the heck does that mean? Well, you're probably watching this because you're trying to buy a rental property and you've got too many fannies and freddies. The mortgage lender says, nope, sorry, you're done. What? What's that mean? Well, Fannie and Freddie is actually not designed for your non-owner occupied projects. It's actually for owner occupied. They started lending on it because it made more sense. A lot of people house hack. Go get one, live in it, go buy another one, another one. And that's how they accumulate all this. But you get 4, 5, 6 of these things on your credit and sign on them, guess what? The lender is going to start pushing back. Fannie and Freddie start pushing back in a lot of different ways. And then if you just go try to flat out buy an investment property that's non-owner occupied, man, good luck with that. They will definitely push back, especially times like this. So you're like, well, if you've accumulated a lot of these investment properties, especially the last 8, 9, 10 years, either through Fannie Freddie, sometimes you buy some bank stuff, they may be coming up on some loans are being due. You're like, well, what do I do? How do I see opportunities out there. How do I go take advantage of them? I'm stuck and I'm frustrated. I'm hitting my head against the wall. It's like, there's money out there to be made, investments to be made. I need to go do it. I'm extremely frustrated. Let me give you a solution. This is fantastic. This is a solution we found, a strategy we've created for our investors. What we have is actually the ability to go portfolio those properties all under one loan, one payment, taxes, insurance, escrowed in there. You can borrow as an entity, as an LLC, so it gets it off your personal, frees up your Fannie and Freddies, and because these guys are non-bank, you can cash out of the project up to 75% of the appraised value. Pretty good. You're like, hey, wait a minute, I don't need that much money. Well, here's the great thing. This is 2020, not 2008. They're not gonna let you get overextended. There's some debt service coverage requirements, DSCR. We'll go over that later in a different video. But they're gonna govern you to make sure you're still profitable and you're not over your skis and too over leveraged. So that's the good thing, is keep that in mind. But think about this. You have too many Fannie Freddies. You want to go buy more investment properties, but you can't. You want 30-year terms. You like the Fannie Freddie stuff because it's very easy to do and they're very cheap. Well, easy and easy is relative, but easier to do. You've got a great person there. What do? So let's make it easy on you. We're going to bundle all those properties we already have into one loan. LLC borrower, take them off there. So now no personal guarantees as a non-recourse loan, no personal guarantees. You now have liquidity to go buy more projects or more properties. Fannie Freddie, bank lending, or if you have liquidity, guess what you can go do? Anything you want to. You can go pay cash for something, then refinance it. You can go invest in someone else's deal passively. You want to go on vacation, you go buy a Ferrari. It does not matter because it's your money. It's that lazy equity, that lazy teenager equity that's tied up in those properties. You're able to release that and employ that. Now, if you want more information on this, I actually got a great ebook on this exact subject, how to basically fire and your lazy teenager equity, actually employ them to do more things, actually grow your portfolio. So go to my website, billybrown.me, to go download that. Links below as well. Now, we actually covered this on a couple of different platforms, including the Real Estate Guys radio program. That link is also in there if you actually are more audible. You actually listen to how Russ and Robert talk about this and the importance of liquidity in a down market, because guess who's going to win in a down market? Those that have liquidity and can go be bankable. So why not be that? So hopefully this helps out. If you guys got more questions, on my website, so a form to be able to contact us. We actually can get what we call pre-flight this very, very quickly with a few quick forms. We're not pulling credit or anything like that, but it's very easy to go do, get you a quote. Now, I will tell you this. This is a caveat right here you guys need to know. When you go do this, when you go do non-recourse lending through borrowing through an investment property, and it is it's non-bank, your rates are going to be higher. If you've borrowed at 4.5%, you're not going to get 4.5% on these type of deals. This is a cost of funds type scenario and an opportunity cost. This is not, well, I need arbitrage. I need to be able to save money by refinancing to a lower rate. That's not what this is about. This is about opportunity cost. It's going to cost you money to be able to get that money out to go do more things. So you have to have the ability to go buy more properties that are going to be more profitable. That's how you go make your money. So if you know how to buy those, you know how cost of funds work and you actually have true arbitrage is, then this is for you. So if you're a rate shopper, this is not for you. Don't contact us. This is not what this is about. This is about strategy. It's about going from owning real properties, becoming a real estate investor, freeing up liquidity to go do bigger things and take advantage of what's about to have in the marketplace. So again, website, billybrown.me, got a free ebook there for you to download. And also the links to the podcast for Real Estate Guys is also there. So hopefully this helps. Hopefully this gives you a great warm fuzzy that there is an option out there for you and help a big solution for your problem. But trust me, we do this a lot, and man, it is powerful. Have a great day.